on the one hand, the stocks have gone parabolic, but on the other hand, the earnings have gone parabolic. Like
Yep.
SanDisk, we were talking about SanDisk. SanDisk's earnings, I think year over year up like 50x,
Right.
literally 50x, not the stock price, the earnings, the company earnings. And it's still trading for like a sub 10 forward P. I don't know if you're a finance guy, but that's like half the market multiple on a forward basis, meaning like it's a 50% discount on an earnings basis to the S&P 500. So I mean, it's not,
As in like S&P in general is like a 20 forward PE and SanDisk is a
yeah,
10. Yeah.
yeah, something like that, roughly. It might be a 7 or an 8
Yeah,
or a
yeah.
6, but roughly it's like half of the market. It
Yeah.
might be less than that. So it's a very confusing situation because nobody knows when the cycle is going to end. Historically, the memory companies, of course, as you know, are cyclical, and our commodity businesses.
What was
Um,
it that drove the cycles, by the way? Do-
what's
Like,
that?
what was it that drove memory cycles?
Just like it sounds so.
Overbuilds and
It sounds.
underbuilds?
It honestly sounds so like a relic of history because what it was like Apple would release a new phone and it
Yep.
would sell better than expected, and there wasn't enough memory. Also, disclosure: I used to work at Apple. I was a supply chain manager, a sourcing manager at Apple.
Cool.
So there was like
Does that mean you did a lot of like international travel as part of that?
I didn't personally, but a lot of my colleagues did, and I'm still
Yep.
connected with a lot of those people.
Yep.
But yeah, so that's what it was. It was like a laptop that was, a big success or an upgrade cycle that people didn't expect. And oh shoot, there's not enough memory. We got to go buy more memory. There's not enough supply, and then that was
Yeah.
what caused the price. It just sounds so we're in such a different world. It just sounds like kind of ridiculous. Like that's what the cycles were before.
Yep.
Um, it's tough. If you listen to Jensen, which I am an avid studier of a student of Jensen, I listen to
Yep.
everything he says. Uh, we are nowhere near the end of the cycle or cycle, if there even is a cycle. I think what's more likely is we have this, huge huge ramp in spend, which I don't think we're really close to the top of.
Yep.
And then we kind of stabilize, and then we
Yep.
just are
Mostly
more.
just hyperscaler driven, basically, right?
Yeah, I mean the hypers. Yeah, I think the hypers are going to be the biggest, buyers. But and maybe we can talk about this, but like the labs, I think are. Um, I mean, looking at the revenue growth rate of like Anthropic, for example, this year I think they started. I can't remember where they started off the year at, but I think it was something
It was
around
like
10
8 to
billion.
30 or something.
I think they started the year around 10 billion ARR, annual recurring revenue. And now they're at like 44 billion ARR. So, okay, so they 4x'd in the first 2 quarters, more than 4x. If they double again from here, so we have, basically the entire rest of the year, they double again from here, they're going to be 100 billion ARR business. And you don't need to play that out much further to get to a place where Anthropic and OpenAI are doing, hundreds of billions of dollars a year of revenue.
Yep.
And those numbers are huge, but that seems like the direction of travel at the moment. So I think we're gonna have a build out that's bigger than people are expecting. Like this year, I think between the four hyperscalers, they're gonna spend like 700 billion. Next year, I think it's gonna be a trillion, maybe north of a trillion. And I think it'll continue to grow until maybe 2 or 3 trillion per year. Um,
Yeah.
so
When do you think the like year-over-year growth rate of hyperscaler capex peaks or has peaked or whatever?
2030, 2030, 2031, 2032. It's
You're saying both that the absolute amount of capex will grow through 2032, but also the growth
the
rate
second
of the
derivative.
capex.
No,
Yeah.
I think the second derivative will start to cool off next year.
Okay.
Um, yeah, because um, like next year, it depends on what happens with the hypers. So the thing is, the thing is that, like right now, Google, Microsoft, Amazon, they're growing income from operations roughly across the four of them, roughly 25% a year. So the way I think
Yep.
about it is the natural rate of capex expansion is 25%, meaning
Mm.
meaning excluding debt, excluding dilution, excluding whatever other financial engineering, they
Yep.
can grow capex without hampering their going spending money off the balance sheet. They can grow capex at roughly 25% a year on average across the four hypers. Um, but they all just reported earnings and they're accelerating growth. Like AWS grew is now in the 30s, reaccelerated back to the 30s.
Mm.
GCP, Google's cloud, posted like a 65% year over year growth rate. Azure is growing 40%. So there's a world in which the 25% growth in income from operations in these hypers turns into like 30, 35, percent. And then the natural rate of capex expansion again can expand. But still, putting in context, like last year, I think that the collective capex between the four was like roughly half of this year. So the year over year growth rate in capex is roughly 100%. There was tons of free cash flow available to tap into. So the hypers had no issue in doing that. Now they've brought their free cash flow to almost zero, which means if they want to grow faster than the natural rate of expansion, which again is like, let's call it bucket at 25 to 40%, just on the high end.
Yep. Yep.
They're growing. They grew last year over year, 100%. And I said like collectively they're going to spend 700 billion this year. I think they're going to spend a trillion next year. That implies like a 50% year over year growth rate. Natural rate of expansion is 25 to 40. That means that they are going to need to start to tap the debt markets, do dilution. There is going to be they are going to lever their balance sheet. They are
Yep.
going to dilute, in my opinion. And they can do that, but they can't do that. They can't. I think there's a limit to that. So I think the second derivative, like the growth rate you asked about, I think that slows after next year. But in absolute dollar terms, like I think we could go like so next year if we do 700 billion this year, and next year we do a trillion.
Yep.
I think the year and so like that's like a 50% growth rate. Maybe the year after that we do like 1.3 trillion. So that
Yep.
would be a deceleration of the growth rate to like
Yep.
30%.
Yep.
But so that's like a whole thing. So I think that's what's going to happen. I think the second derivative slows next year, but then the
Yep.
absolute dollars of capex continues to grow through like the end of the decade, maybe after that.
Yep.
Um, and I think like so that's like one huge piece of information. And then I think like connected to that is the the magnitude, like the size of these companies, the size of the business that AWS and Google Cloud and Azure are going to turn into is like unlike anything that humankind has ever like. We're talking, there's like a you hear people say like, oh, big tech is like this, like the size of a nation state, like they're the size of nation states.
Yep.
We're going to be going past that where these are not the size of nation states. These are the biggest entities in the world, bigger than governments. So, and that presents kind of a little bit of a scary thing to think about. But I think like that's how I see the capex situation going, and then the implications I think are the hypers end up being bigger than bigger than anyone can even really wrap their head around right now. So
The two questions that come to my head. One is the is the high order bit then on the growth rate basically willingness of the debt markets to issue debt to them, and then who is that? Is that like BlackRock et al, or is that like does it go to like sovereign wealth fund level kind of stuff? And then the other one that I'll maybe kind of queue up is the the it's like the hyperscaler businesses are nice because big deep lock-in once someone's picked their cloud. Is there some world where as AI gets better and better, it can also help people migrate between clouds much more easily and therefore margins go down? Or I don't, yeah. So those are the two
Hmm.
questions. So first one is kind of like, is the high order bit basically the willingness of the debt providers and who are those debt providers? And then second is kind of like does AI impact, does AI erode moats on the hyperscalers clouds?
I don't think the limiting factor will be on the debt markets. I think the debt markets will be, I mean, yeah, I think there's like nearly
Nice.
limitless demand on
Yeah.
to lend to these companies at their current leverage. So at their
Yeah.
current leverage. So like if for whatever reason the debt picture starts to look worse over time, maybe for example, cloud margins erode somehow, and so like the DSCR, like the debt service coverage ratio of if you look at like the fully across the whole balance sheet, if their income to debt situation starts to worsen, deteriorate, then I could see the debt markets being a limiter. I don't think that that's going to happen. And I don't think that the debt markets will be the limiter. I think it'll be the equity. So, um, the equity will start to say, well, like depending on the situation. So if the revenues continue on
You mean
this,
the equity for the labs?
no, the equity for the hypers. So like we're already seeing this like with Meta. I don't know if you're watching Meta, but like Meta's basically shareholder base. Meta's shareholder base is kind of revolting. They're saying we don't want to stomach the spend. Like we don't want to see the spend. We don't like the fact that you are tapping the debt markets and putting debt on the balance sheet. Our
Yeah, yeah. We just
money
want a clean ad business. Get out of this other stuff.
and really what we want is well, it's two things. One, like we want we want buybacks and or dividends to increase, right? Or if you're gonna spend that much money, then we want to have like clear line of sight to why, so that
Yep.
we can wrap our arms around the growth, that we get on board and we're like, yep, we see it and we're
Yep.
okay with it. And that's why like Google, for example, is has the stock price has done so well is because there is like very clear the Google backlog almost looks like a meme. It's like a hockey stick up and to the right. And so there's a very clear reason why Google's spending the money. So I think
Backlog of like gigawatts, basically, you mean? Or
no well so it's backlog of enterprise customers of Google Cloud who are getting in line for accelerated computing. So like for example, let's say Boeing has all of their stuff hosted on Google Cloud. There's not enough maybe they have like some initiatives they want to use AI to accelerate something in their business, and they want enterprise grade, they want SLAs, they want all the reasons why people approach the hypers for this accelerated computing. And they say they go to Google and they say, hey, we want X amount of compute capacity, and Google
yeah.
says, sorry, we're all sold out.
When you say
But
accelerated
here's
computing, you mean GPU compute, basically? GPU,
it
TPU
could
stuff?
yeah, GPUs and or TPUs.
Yep.
It can be because Google services both of those things, right? So it could be either or both of those. Yeah, so Boeing would approach Google. They'd say, hey, we want this access to this capacity because we have these internal needs for it. Google says we're sold out of all of our capacity, but here's a contract where you can get into our backlog. Okay.
Mm.
And that backlog then is reported to Wall Street. And every quarter they report the numbers, the backlog numbers to Wall Street. All the clouds do. And
Mm.
if you look at Google Cloud's backlog numbers, it's literally a hockey stick. Like it's an insane. And so investors look at Google and they say, we understand why you're spending all this money because
Yep.
you're trying to service this backlog of customer demand.
Yep. Yep.
With Meta, that's not there.
Yep.
Meta doesn't have a cloud. So,
Do you expect that to
so
change, by the way? It seems like they're doing stuff in the kind of they've talked about, oh, we could sell compute if we need to, blah blah blah.
um, I've been in the camp that I don't think Meta, and I think it would be bearish, fundamentally bearish for the whole AI complex if Meta were to turn around and rent compute, because Meta should be the best positioned company. It's entirely software. The entire company is software. It should be in the best position to make use of all this accelerated computing. So if Meta can't, I think of it as like some type of economic hurdle rate where the basic equation is, can Meta earn on that compute, on those the money spent on compute, can Meta earn more
Yep.
than what it would cost them to rent that compute from one of the hyperscalers? So for example, like I don't know what the fully loaded, but let's just speak in terms of margins. The margins for cloud rental for AWS maybe is like 30%, 30, it's creeping upwards. And that's another thing that's happening that we could talk about. But like,
This
let's
is
say
operating margin, right?
Yeah, operating margin for the clouds.
Yep.
It has been around 30%, but it's starting to creep up. I think the average across the four crept up towards 35. So that's interesting. And that's another thing that goes back to what I was saying about the natural rate of capex expansion. If the cloud margin starts to climb, that gives more breathing room for the cycle, for them to spend more money. But so if the margin is like 30% for AWS, right? And let's say the blended is, I don't know what the rental like per hour, GPU per hour is, $100 an hour. And that includes the 30% margin from Amazon. Fully loaded cost to Meta is like $100 an hour for a GPU. The question is, do I earn, because that margin could be captured by Meta, right? So the question is, can I earn more than $100 per hour from that GPU using it internally at Meta? Does it make sense? So Meta should be one of these they have all the talent, they have tons of these Silicon Valley engineers. They should be able to clear.
And you're mostly thinking in terms of like ad algorithm optimization, basically. Like,
well, yeah, because that's 95% of the business. But yes, that and or
like Reels algo and like ad matching algo and.
But not like yes that, but also there is value in kind of like other bets and things like mostly yes. There's other things that Meta's
increasing software development velocity, that kind of stuff, you mean?
That's right. Yeah, for the glasses, because that has an enterprise value. There's an enterprise value that's attached to that. That's why they spend so much money on building that stuff out. So Meta should be the best company, one of the best companies in the world to make use of this accelerated computing and clear that economic hurdle rate. And so historically looking back on it, my thing has been, if Meta turned around and said like, oh, we'll just become a cloud, then that's kind of scary for me, because I start to wonder, if Meta can't clear that economic hurdle rate,
why would anybody else be able to?
How would anyone else be able to?
If Meta can't clear it, why would Boeing be able to? Yeah,
exactly. And then so that's something to watch. Wall Street would love it. The thing is, what I'm saying to you is not a popular opinion. Most people would be like, oh, I would love, if Meta just did a cloud, it would be amazing. And it would make Meta stock go up, because then all of a sudden, all the spending, there would be visibility. Meta's already talked about on earnings calls that they've had a lot of customers actually approach them and be like, hey, do you guys have any excess compute? Because we need compute. Do you have any compute? So they've already talked about stuff like this. Wall Street would love it. People would love it. For me, if I see that happen, I have questions. I start to have real questions about what's actually happening here.
Yeah, it's interesting. It makes me think of like XAI, Grok as an example. It's like they had excess compute that they obviously weren't able to fully make use of.
It's interesting.
Rent it.
Yeah, I mean, to me, there's a defensible argument to be made that just because that were to happen does not necessarily mean there's a fly in the ointment, so to speak, with the story here. Because
give you a red flag at least, basically.
It is a minimum a yellow flag.
Yeah,
it's a minimum a yellow flag, and it's something that I would question and I would want to dig into deeply, because everything I said, if Meta can't clear that economic hurdle rate, then who can? And Now,
What
but
are
the answer to that might be Anthropic and OpenAI, and that might be actually acceptable. So I'm not saying that this is like a bulletproof, like red flag,
Mhm.
it's over, or sell everything if this happens. It's just that it is pause for questions for me.
Yep. Yep. The what is the sort of things that like the Boeing et al. Like all these GCP backlog customers, what is the stuff they're doing, and d does that clear? Is that clearing their economic hurdle rates these days?
That's the big question. We don't know. I mean, we don't know, and I don't even think they know. That's actually kind of the one of the last remaining, and it to give it some more credit, like it is a good question, honestly. Like, is this how much of this stuff is, you're just you're tinkering, it's like you're testing things
Yeah.
and
It's almost like how
verse
much of it is spend in search of ROI versus spend that is ROI positive.
I was just having this conversation with somebody and they were making this case and they were saying like, well, they were leaning bearish on several things because of some of this stuff.
Because their
I
view is it's
personally,
more like in search of ROI rather than ROI positive.
yeah, I personally would be much more sympathetic to that argument, or was much more sympathetic to that argument when the numbers, one, when the numbers were smaller, and two, um, and this is macro data, so it's not like I wouldn't say it's like take it to the bank, but if you look at the S&P 500, the 493, so minus the Mag 7, the big tech companies, just the earnings from the 493, the regular companies, they're all accelerating.
Mm,
So that's not bulletproof, but it is a very strong data point that if
yeah.
this was not ROI positive, then the expenses would exceed
Yeah.
I don't, and so that is actually like the biggest data point for me that says it's actually not. There is, of course, that happening of like it's you're not crossing the economic hurdle rate.
Yeah.
That's happening for sure. But at the aggregate level,
Yeah.
I'm seeing what I'm observing is very strong evidence that that is not the case at an
Yep.
aggregate level.
Other thing that it makes me think of like web and mobile stuff in that a lot of the initial spend probably is speculative, but then it probably reaches a point where it becomes like fiscally irresponsible to not have a good website or not have a good, mobile app if you're Expedia or whatever. Um, and then you kind of, because your competition does and the customers want to interface through that channel or something like this. So I could imagine something similar with a lot of the AI spend where it's like, it'll be speculative to start. Then these companies' competitors start adding things. And then if they also cannot do the same things, then they are worse off. And it's kind of this like red queen race a bit.
Yeah, I think we're still a little ways away from like the customer side of things changing. Like you see a little bit of it with like Amazon has like Rufus, which is supposed to help you with, and Walmart has an equivalent thing. And there are like customer facing things like that. Like Amazon will sit there and tell you that it's like driving, 70% revenue growth. Like so I really don't buy that personally. I've used it before, it's fine. It's whatever. But I think that's not where like the S&P 493, that's not what's happening. I think what's more so happening is you're seeing you're seeing efficiency gains. Like I think that I think it's teams that are doing more with less. Maybe they're building products that look
Yeah.
like just regular software that we would use, but they're using AI to build it and they're monetizing that. So it's not
Yeah. Yeah.
necessarily,
Yeah. Yep.
it's not like the Rufus. It's more
Yep.
like, they get to that next thing on their agenda
Yep.
faster.
Which
So
then I suppose has the same similar effect of if you're more efficient and you spend less on headcount, then you're kind of forcing your competitors to be able to do the
that
same thing.
that is happening,
Yeah.
no question. And I think right now inside of corporate America, this is like pandemonium. It is so much pressure. It is so much pressure, and so it's so intense and so much you know
Mm.
weight being born into these
So
teams.
that's basically the driver of like all the Anthropic spend is just that like we have to do more with less because our competitors are, or we have to do more with, yeah, we have to do more with less or the same with less kind of thing.
I think more with less, more with less. I think actually the key word is more. We just need to do
Yeah.
more. We need to do
Yeah.
more. And that I think is like really I think it's actually quite painful inside of these organizations. These people are
I mean, it
being
just goes
pushed.
down from the CEO all the way down to just like everyone is pushing their directs. Like, okay, you're not going to get any budget for like hiring people. You just have to do more with these tools, etc.
I mean, I wrote a tweet about this that at Apple, and Apple's been very conservative. And actually, even like 6, 12 months ago, the sourcing team didn't have access to the AI stuff because there was a data privacy concern, and
Hmm.
there was a because it's sensitive data, sensitive information is being handled. Um, Now it's if you lose a headcount and we look at your team's token spend, this is not an IT department thing. This is a business team. If we look at your team's token spend and it's non-existent and you're asking for backfill on headcount, this is you lose a person that was on your team, right? They leave the company, they rotate, whatever. You need to backfill that person. The leadership team is now saying, well, wait a minute, before you go and backfill that person, what have you done? What have you spent on AI? The point is not the point is not that you can replace somebody with AI. That's not the point. The point is that this forces more work, you know, more work onto these
Yeah.
people. They
Yeah.
can use AI to help augment it, but actually I think what's happening is like in combination with that, it's also the expectation of just more work
Hmm.
output is rising.
Hmm.
And
Yeah.
that's extremely stressful for people. It's very this is a very uncomfortable moment in time, a very deeply uncomfortable moment in time. And I think people that work in big companies right now, they're feeling like really deeply uncomfortable about a lot of this
Yeah.
stuff because it's it's like not reasonable expectation, and that's doesn't it doesn't matter. That's missing the point. It's not about whether it's reasonable or not. It's just that the expectations now have changed.
Yeah.
So that's driving earnings. That's the thing is from a shareholder perspective, I think again we are seeing that show up in numbers, and it's complicated because it's not all a positive story. Like people are being impacted by this and not
Hmm.
super positive way.
So everyone's getting squeezed. It's kind of working more, um, expected to do more with the same or more with less,
Yeah,
regardless
and
of
whether
AI.
and whether and whether you use AI or not,
Right.
it sort of doesn't matter. It's up to you to figure that out.
Yeah. 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 Interesting. And then, so then the whole AI product pitches kind of slot perfectly down that,
Now
that urgency.
there's another thing which is like so that's at like the working teams and that sort of
By the
thing.
way, are you good to go like 10 over? I know we're at half
Oh
past.
yeah. Oh yeah, I
Cool.
think this is yeah, good conversation.
Awesome.
Um yeah, I think there's also a lot of pressure at the C-suite level of, how what are you doing to actually transform this business? And that's why you're seeing Palantir do so well is people are being asked that question of like what are you actually doing? And
Yeah.
so it's just pressure. It's just so much pressure all around at the moment.
It's so interesting. It's almost, yeah, it's almost like the labs did a good job of kind of manufacturing urgency around all this stuff. And now it's just totally
Yes.
cascaded its way through corporate America.
100%. And I think people that are maybe international, they don't have like the America corporate system is such a monster. It's
Totally.
such
And it's
a,
normally, I think of it as so, so much inertia or whatever, but they managed to create enough fear and chaos that
yep.
they actually got the monster to kind of move.
Yeah, that's a great way of putting it. That's a great way of putting it. And that's exactly what they did. And that's what's happening is
Another
there
example,
is
the Mythos
fear.
thing with the US government.
Yeah, there's and that so that's causing like you're forcing people to like
Psychosis.
change, right?
Yeah.
And there's a paranoia and there's
Yes.
pressure and fear and um so it is a moment of extreme change and
Yeah.
whether it's like justified or reasonable, that is completely beside the point. It's totally beside the
Oh,
point.
interesting. It's like
Yeah.
the fear started in like, less wrong circa 2012 or something, and is like finally spread out to enterprises across the country.
And it is in full flight. It is in full flight. There is
Wild.
100% buy-in to this. I think if you're not bought in, if you're a skeptic or whatever, there's the door.
It is wild.
There's the door. So yeah, it's a crazy moment in time.
The other thing, the kind of moats of the hyperscalers, um, in my head, it's like hyperscalers have strong moats because once you invest in a given cloud, you just everything kind of runs through that. Like you hire people with that expertise on using that platform. You use things that are compatible with that and so on. And so there's probably just like massive long tail of like lock in. So that's probably the bear case against like AI um, weakening that lock in. But then the other thing that goes through my mind is like, and also it seems like the way people use the computer is going to change a lot over the next few years. And a lot of the lock in is kind of lock in if a human is using it, but may not be lock in if someone's agent is driving their computer or whatever. Um, yeah, I don't know. How do you think about it? Any views? How's your view similar or different?
Well, I think one piece of this is if you look historically at what percent of OpEx of a typical company is represented by the cloud spend, it's historically it's been a very small part of OpEx, like maybe
Mm.
2 to 4%. Now
So
what's
it's not worth
happening?
churning kind of thing at that
Now
point.
we're turning, now we're turning, and not worth worrying about lock-in that
Yep.
much
Yep.
because it's this. And I wrote an article about this, but now this spend is augmenting not just IT spend, but labor. But it's starting to augment. It's creeping
Yep.
out of the IT spend into the people spend.
This reminds me, as an aside, maybe a good last question after this one will be
I'm good to
like,
talk for longer too if you want to
okay,
go
sweet. Yeah, I
longer.
could probably go till 45 past.
Yeah, sounds good.
Awesome. The one that I'll queue up for us is like the the milkshake thing.
Mm.
Uh, what do you see on the horizon that might is there anything that breaks that? Like, are we compute? Do we have
Yeah,
a undersupply of compute for the, next
yeah,
7 years plus kind of thing? That's the
yeah.
question that I would kind of.
Okay. Well, let me answer first the
Yeah, yeah, sounds good.
finish answering the hyperscaler thing. Um, so now now the cloud spend as a percent of OpEx is growing, right? It's not 2 to 4% anymore. It's going to creep maybe 10%, 20. Depends on how,
If you're
you know,
OpenAI, it's a lot.
oh yeah, sure. But even if you're you know,
If you're Boeing,
if you're Boeing, you have a research and development budget.
yep,
And so the question is, well, like what percent of that in the future is going to be tokens? It's going to grow. The percent of spend on compute on tokens is going to grow. So that's all happening through your hyperscaler, your cloud,
do we get a
which means
saturation point on models where it's like they exceed some like it's almost like you could separate all the different types of token tasks by how intelligent the token needs to be, and then does a lot of Boeing's work saturate on things that Kimi K3 or whatever is going to end up being
yeah.
sufficient for, or will it just be they'll mostly need frontier tokens kind of thing.
All right. Well, okay. I my so just let me just finish the point about
Yeah,
the
yeah.
hypers because I think it's an important
As you
point.
can tell, I'm very ADHD. My brain spawns
No,
off.
it's all good. It's all good. I'm glad to get this on video.
Yeah, yeah.
It's good because it's in my head. It's been in my head for so long, and I think about this all the time, all this stuff all the time. So it's good to talk about it. I think as the percent of spend with the cloud on OpEx, the percent of cloud spend on your operating expenses goes up. The concept of lock-in starts to become actually very important because
Yep.
now it's not 2 to 4%, it's like 10 to 20% of your total operating expenses, your business
Yep.
is happening through this. That is to me a very underrated reason why Nvidia, in particular Nvidia, is so important because the clouds will say, oh, we're locked into Nvidia. The clouds will say that they are locked into Nvidia. Their end customer is benefiting from that because if they build their stuff on top of CUDA, Nvidia's platform, they can move it to, if they're on Google, they can move it to Amazon. They can move it to Microsoft. If they build on top of TPUs, which is Google's accelerator, they can't move to Microsoft or Amazon. All their stuff is built on a TPU accelerator base.
Yep.
So the hypers are very loud. They have an outsized voice. They have the megaphone. Everybody listens to what they say. They'll say like, "Oh, customer choice and lock in," and we're all this stuff. But their end customer, I think, increasingly is going to care about what platform they're building on because the percent of OpEx again is going to continue to expand. So that's just the point I wanted to make on the hypers. Your question about like the saturation of like how like does Boeing reach a point where it's like the model's sufficiently smart? The thing is like in an isolated or like in a one by one analysis, I think that will happen. Like I used to work for General Mills. There's a saturation point where General Mills is like not gonna. I don't think they're gonna like spend to infinity and beyond on tokens. But at aggregate, really what we're talking about is like solving problems. And to me, it's like, unless we solve all the problems, there's probably more intelligence to be spent. So that's at the aggregate level. And then I would say as far as like the value, and this is something that I feel very strongly about, is the value of the marginal value of intelligence is much higher than people think. A model that's 5% smarter is not 5% more valuable. It's like it might, in certain instances, it might be 10 times as valuable.
Yeah.
Because, for example, if you're in like a quantitative trading setting, right, and you have access to a model, I don't know if you're familiar with like high frequency trading where they set up data centers that are close, very close to the exchange because they need to be a nanosecond faster to get the order in and out. And so they're willing to spend literally tens of billions of dollars to enable that because it's worth almost infinite amount of money to them, right? Yep. So, not to make it too apples to apples of that, but like, the marginal value of intelligence is enormous. And inside of organizations, this plays out too. At Apple or at a lot of these big companies, you'll have a team of people. They're all extremely talented. They're very hardworking. They do great work. They all do great work. They're super committed. They work extremely hard and they drive great results. But you have to calibrate them. Not all of them are going to get the same performance review. And the difference between the pay, depending on performance, might be significant. So one person might get a $100,000 RSU package for their performance. Another person might get $185,000. If you analyze the work product of those people, they might be very similar, very similar. It's just a small difference, maybe even down to one median during the year that person showed up better in. The other person had a meeting where it was like it was okay. It wasn't like a shit show, but it was just okay. And that is worth 85% more money to the company. And it's like, so that is already, we have a good analog to look at in our own human enterprises to to say like the marginal value of intelligence is huge. It's way bigger than people think. So
Yep.
I think there will be demand for the frontier. And by the way, we're
The
seeing that
Forbes
already.
rich list is another example of this.
Yeah, exactly. Like the person, yeah.
It's power law distributed.
Exactly. So like the frontier, and we're seeing that. That's why I kind of laugh sometimes. I listen to these like local AI open source model, junkies, and I actually think there's like you said, like I think if you could break out a task and you had a part of it that could be handled by like local compute or something like that, that could be, you know, important and valuable. But to think that you're gonna like get rid of the frontier stuff and just like go to your local, you're at a fundamental disadvantage. Why would you do that? Just for a little extra costs? Like the value is way. That's why we're seeing that already. Anyways, like all the demand you're seeing is on the frontier. You could look at Open Router or whatever, and all the huge majority of the tokens are in OpenAI and Claude, right? And not in DeepSeek and not in Quen, and those are getting used, but they're not competing with OpenAI and Anthropic, and I think that'll just continue to happen.
Yep. The and then does the AI does new ways of using the computer intersect much with ease of migrating between clouds, or not too much?
Oh, yes. That's a good question. I think the jury is out. I mean, I think that's what makes this technology so disruptive is that everything in the end is software, kind of. Like if you think about it, like everything kind of boils down to software. Even hardware boils down to software because in order to build something, it starts in a CAD design, and then it gets designed, like a chip gets designed in Cadence and Synopsys, and then it goes to TSMC. Well, how are all the machines built? It's all digitally created first before it's physically created. So everything in the end is software. That's what it is extreme. This concept is very disruptive. But I don't think that's ultimately like what I think can it happen? Could it happen? Yes. That's why we've also seen such a derating of, but then the other thing with the clouds is like they're all capacity constrained. So even if you could in theory move from Amazon to Google easier, if Google doesn't, if you're at Amazon and you want to move to Google, if Google doesn't have capacity, then what are you gonna, there's no point in leaving.
Yep.
So
Yep.
Until we figure out this capacity thing, I think as far as the clouds are concerned, that's not a risk. That's not an issue at all.
Cool.
At the moment.
I think that's a good spot to leave it. This
is
great.
Yeah, man.
Yeah, very fun.
This stuff the world is it's crazy. One thing I want to say is like, because I was looking it up before joining, the percent of the S&P 500 that was semiconductors prior to ChatGPT was like 6%. Now it's 22%. Wow. It's 22% of the S&P 500 is from 6. Yeah. That happened in, ChatGPT 2022. So that happened in 4 years. So that's a literal representation of the world is changing.
November the 30th, 2022.
It's a moment that I think we're gonna have their history. Our kids are gonna learn about in school.
From their AI teachers.
Yeah, exactly. If there's even, I've got do you have any kids?
Yeah, I got 3.
Okay, cool. I have a 8-month-old baby girl, and
awesome.
It just is crazy thinking about that, Mythos and Vera Rubin, Nvidia systems and all the stuff we consider to be like frontier cutting edge. Like that's going to be a relic. Like she's going to be
dial up.
By the time, yeah, it's going to be dial up, dude. Mythos is going to be dial up, and just thinking about that is
like, you have to wait.
So crazy.
You have to wait for the tokens, and they were that
dumb. Literally. You used to get
crazy.
50 tokens a second, 100 tokens a second.
It wasn't instantaneous for everything.
I get 1 million tokens a second. What are you talking about?